Hi everyone, welcome to the latest educational video from Catapult Wealth. My name's Catt, and today I'd like to talk about self-managed super funds. Particularly, is a self-managed super fund right for you? This is a commonly asked question of us at the moment, and self-managed super funds are going through unprecedented popularity across Australia, with the growth in super funds being something in the order of 3,000 new super funds set up every month. Super funds aren't right for everybody, and it's really important that you sit down with a professional and understand what you want to set a self-managed super fund up for. I talk to a lot of clients about the purpose of the self-managed super fund, and that might be to buy property in it, it might be to get more transparency, more control, lower fees. There are a number of reasons why you may do it, but be very clear on your purpose and be very clear about the reason you want to do this. One of the questions I get asked a lot is, how much money will I need to set a self-managed super fund? Given the costs are fairly of a fixed nature in a self-managed super fund, we generally see as a ballpark number anywhere between $100,000 to $200,000 as a minimum starting point for setting up a self-managed super fund. A self-managed super fund is got a number of different costs that we'll cover off on later in this video, including accountancy and audit and establishment costs, which you need to weigh up against the cost of your current situation. There may be a number of reasons why you set one up, and it may be about the fact that you want to do something specific about your investment strategy that you can't do in your current fund. But with all that in mind, that level of funds is required as a minimum to establish a self-managed super fund cost effectively. Second major question we get asked is about the benefits of a self-managed super fund. And I think there are 3 or 4 clear benefits of a self-managed super fund, the first of which is transparency. Clients who use self-managed super funds get to see more clearly what their investments are doing. They get to see the income going into a bank account that gives them a clear indication of how their investments are performing and what income they're providing them. The control aspect is fantastic in that they can tailor an investment solution particularly for the client's needs. You can use direct property in self-managed super funds, which is a clear advantage of an SMSF. The tax advantages, given the flexible nature of self-managed super funds, is an advantage as well, and they are numerous. And even there's estate planning advantages in how you can transfer money to your partner and ultimately through to the kids through self-managed super funds. Self-managed super funds, there's the first layer of costs that you need to consider is firstly the establishment. The establishment, depending on the type of trustee structure you set up, could cost you anywhere between $500 and $1,500. That's just a one-off upfront fee. The second layer of costs that you would need to consider is the ongoing administration costs. Those administration costs, the accountancy, tax, administration, audit, would cost in the vicinity of anywhere from $1,800 to $3,500. The last layer of costs that go into a self-managed super fund is the advice component, and depending on whether you use a financial planner or not, and what level of complexity is in the super fund that you're considering, those fees can range from anywhere from $2,000 to $8,000. And that's an ongoing for reviewing the super fund, monitoring it, making sure your strategy is correct and so on, making sure all the tax outcomes are spot on. Who is suitable for a self-managed super fund? There are a number of different reasons why people set them up, and I'm finding now it's certainly the suitability is somebody who wants to have a little bit more involvement with his superannuation than not. You don't have to be an expert in the share market or an expert in finance and investment to set a self-managed super fund up. And really the whole phrase self-managed super fund is a little bit misleading. Using good accountant, good administrator and and a good financial planner will help walk you through this SMSF establishment and structure and make sure you're on the right track. So please don't think that you need an enormous amount of knowledge and expertise to be able to run and look after a self-managed super fund. Who is involved in establishing a self-managed super fund? There are two major parties involved in the establishment. Firstly, there's the accountant or a super fund administrator. The accountant will establish do all the establishment in terms of setting up the trust deed. They will make sure that all the paperwork and the ATO is notified for ABN notification, tax file numbers are applied for. If you use a financial planner to set up a self-managed super fund, this financial planner will help take care of all the rollovers from your current super funds, make sure you're given the right advice on your insurance that's attached to those, make sure that your bank account's established and in the right name, if you need to set up a share broking account and things like that. So the two major parties involved are your accountant and potentially financial planner and yourselves, obviously. You can invest in a variety of things in a self-managed super fund, and it's a little bit, you've got to use common sense in what you can invest in. You can invest in listed shares, term deposits, cash. You can invest in residential property. You can invest in commercial property. The bottom line is there isn't a lot that you can't invest in, but there's one clear purpose that a self-managed super fund has, and that is that you invest in things that are designed to provide for your retirement. And that is an overarching rule of a self-managed super fund. And one important thing that you can't invest in, and I suppose that's probably an easier thing to talk about, is that you can't go buy a residential property and put your own family in it or family members in it. That's certainly prohibited. And the other thing I get asked a lot about is investing back in machinery or your own business, and that's something that's prohibited as well. There's not a lot of administration involved from a client end, but it does depend on the type of service provider that sets up your super fund for you in the first place. There is a lot of accountants and super administration services that offer you what's called a mailbox service, where they will take on all of the paperwork on a week-to-week, month-to-month, year-to-year basis, and then send you ongoing reports, and then ultimately send you an end-of-year set of financial accounts and tax returns to sign off on, and then they will lodge. In that instance, the administration burden is minimal. The only thing that you're left in complete control of is the investment side of things. You still decide in that case where you invest in and how much you invest at all times. There are some other people that would prefer to take on all the administration themselves and therefore send all the paperwork via their own address, and that will involve a whole lot more administration perhaps than the mailbox option. The choice is yours. You can have as much or as little administration in setting these self-managed super funds up as you would like. One key last point is talking about the responsibilities as a trustee. And as a trustee of a self-managed super fund, you really clearly need to know that this money is designed to be put away for your retirement and to provide an income in your retirement. And so the government is very conscious of making sure that we're doing the right thing with this money in self-managed super funds. It's very easy to see a bank account with some money in it and say, well, we can write ourselves a cheque and get access to that. And having a self-managed super fund provides temptation to do those things. But it's important that you understand that it's a separate legal entity that has its own set of rules and responsibilities around it, and that it's quarantined for your retirement. There are significant penalties involved if you breach these rules, on the flip side of that, the government introduces strict rules around it that does provide us with significant tax benefits and advantages of keeping our money in this superannuation environment. It's important that you understand these responsibilities, but they're not onerous, and again, common sense will prevail in many of these cases. If you're wondering about or inquiring about self-managed super funds, please speak to Catapult Wealth or myself. We'd love to chat and have a free consultation about whether a self-managed super fund is right for you.